One of the things that surprised me on the positive side for Uber is the way it's delivered growth on both parts of its business, mobility and food delivery. And so I wanted to talk a little bit more about those two segments of Uber's business here as part of the reasons why I'm bullish on Uber stock longer term. So let's take a look. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/parkev for the 10 best stocks to buy now. So in the most recent quarter, Uber's mobility segment, which are rides, grew by 24% year over year. And it came with record profit margins of 8% adjusted EBITDA of gross bookings. And part of the strength was in weekday trips and airport trips. So airport trips, yes, okay, that's an obvious thing that you would want to take an Uber for because you don't want to take your car to the airport. And then if you're traveling for several days, you got to pay every day for parking. It can get very expensive. So it's cheaper, more convenient to take an Uber to the airport. But a less obvious reason is becoming more obvious, and that is in weekday for commuting. If you own a car because you need to get to work, it's becoming more and more in favor of just taking Uber instead of owning a car. If you account for all of the costs of car ownership versus taking an Uber commuting to work, in most cases, Uber would be a more attractive option. In most cases, this is especially true for a lot of people that live in apartments in crowded cities where parking is a limiting factor and car insurance prices are absolutely soaring, and car insurance is mandatory, at least here in California. Price of fuel absolutely soaring here in California. Again, the benefits of living in California are numerous: higher insurance prices, higher gas prices, higher taxes. I could go on all of the attractive reasons to be in California. But it's becoming more apparent, and I'm seeing this a lot. And I'm hearing this a lot from students as well. Students, the younger generation, car ownership is not something that they are interested in. Not as much as I think our generation was the last generation that was really excited to get their driver's license and own a car and have that freedom, right, that owning a car gives you. Nowadays, comparing with Uber, owning a car has become more of a constraint rather than freedom, with how much you have to, as a younger individual, how many hours they would have to work in order to pay to own a car with everything that's included in car ownership. So in terms of freedom, just taking Uber wherever they need to go is gives them more freedom of choice, more freedom of time than owning a vehicle. And I suspect this will continue working in Uber's favor. The trends are not working in favor of car ownership. They're actually going in the other direction. Car manufacturers are no longer manufacturing or are less interested in manufacturing the more affordable cars nowadays. They're more interested in manufacturing those higher priced SUVs and higher priced vehicles. And then on top of that, they're being forced to manufacture electric vehicles, which of course are more expensive and even more inconvenient, right? Imagine I'm talking about how inconvenient it is to own a car, and this I'm talking about just all cars, but especially inconvenient to own an electric vehicle where charging is becoming more of an issue. If you live in an apartment, how are you going to deal with the charging issue? Where are you going to charge? How long do you have to sit around and wait for your car to get charged? And so these trends are working in Uber's favor, and it's showing up in their results. So in the US alone, they estimate that 45% of the population lives in places without reliable on-demand service, leading to longer wait times and unfilled trips. So earlier I was talking about crowded cities and how much more price performant it is to have an Uber. But there's places in the country, 45% of the population is not in those types of areas. And for them, it doesn't make sense just yet. But Uber wants it to make sense for them. So they intend to capture that market through improvements in marketplace technology, better pricing strategies for trips in these areas, which tend to have longer pickup distances. And they're using their platform advantage to cross-sell both consumers and earners between mobility and delivery. So to the first point, I think Uber can do that. I can see pathways to make it more convenient for people that live further away from those dense urban areas that has more availability. They could do things like reserving, like if you know for sure tomorrow morning you're going to need to commute somewhere, you can pre-order an Uber ride and Uber can make it less pricey if you order ahead, which can then be a win-win situation for both the driver and the rider because the driver will then know, oh, for sure, I've got this ride tomorrow morning. And so I can start my day knowing that I have a customer instead of feeling like, oh, I don't know if I'll have a customer at that time. So it's a win-win for both sides as they develop that technology and make that more attractive. It's a market that I am reasonably confident that Uber can capture. And then to this last point, they're utilizing platform advantage to cross-sell consumers and earners between mobility and delivery. And to bring this into simpler concept, this means that Uber can spend money on marketing to attract a customer, but then that cost of that customer can be split across two segments of its business. So if Uber pays to attract the customer, let's say $1 for advertising to get someone to download the Uber app, well, it actually becomes 50 cents per use case because that customer can be both a customer for Uber Eats and for the Uber Mobility, which let's say a competitor in the United States like Lyft cannot do that, right? So it cannot in advertising markets, it cannot bid as high as Uber can bid to attract the customer because Lyft's cost cannot be split across two segments. The cross-selling opportunity is not there for Lyft as it is for Uber. So this is a competitive advantage for Uber having both segments of this business. Therefore, it reduces the cost of acquisition, the cost per acquisition, if you're looking at these as two separate segments. And so you can count this customer as a customer of your delivery segment and mobility segment. Speaking of the delivery segment, the gross bookings grew by 17% year over year, and that's 6 straight quarters of delivery growth acceleration. Particular strength in the United States, Canada, and Mexico. Order frequency also reached another all-time high. Uber is attracting more users, and the users are ordering more frequently. And of course, that creates the positive virtuous cycle. If you have a lot more customers ordering food for delivery, that's going to attract a lot of merchants and restaurants that want to be on the Uber platform, that want to sign up for the Uber platform because that's where all the customers are. So you're getting all of these customers that's attracting a lot of restaurant businesses, which then of course makes it even more attractive for customers because there's more items available, more food available on the platform. And so they create that positive virtuous cycle, similar to how Visa got started, right? With customers and merchants. And that positive virtuous cycle has led Visa to be a absolute dominant business in the world. And Uber's got a similar positive virtuous cycle working for itself here in delivery. And you're already starting to see the beginning stages of that competitive advantage, that positive virtuous cycle, starting to multiply itself and get stronger and stronger. And like a snowball going downhill, the bigger it gets, the more it attracts these businesses and consumers as they hear about all of the customers on the Uber platform. It becomes something that could eventually be almost mandatory. If you're a restaurant, you've got to be on the Uber platform because the Uber platform has, so and so hundred of millions of customers that are ordering on there. So you're putting yourself at a competitive disadvantage if you're not on that platform. Hey everyone, I'm excited to announce that my book is finally available for sale. I've been working on it for more than a year now, so I'm really excited to finally share this with you now. It goes through my framework for evaluating stocks. Some of you often ask why I like this stock or why I like the other stock, and this framework provides you the things that I look at when I'm evaluating stocks. I've added the link in the description below.